The Dow Jones just hit 50,000. 50,000. And look, I get it. That's a headline that basically writes itself. Stocks are soaring. America is winning. Cue the confetti cannon and the bald eagle flyover. And President Trump is already out there doing the political version of a victory lap, congratulating America, congratulating himself and demanding that his cabinet congratulate him. But we economists have one deeply annoying habit. When you show us a big number, we don't say, wow. We ask a follow-up question. We ask, compared to what? Because 50,000 is a milestone, not a measurement. So today I want to put Dow 50,000 in context, in particular in international context. Spoiler alert, there's not really much to boast about here. In fact, when you look at the numbers the right way and with the right context, markets are grading the Trump economy pretty harshly. Okay, so let's start. What is the Dow and what's going on? I want to start with the obvious but important bit. The level of the Dow is basically arbitrary. It's not $50,000 or 50,000 companies or 50,000 units of national success. It's an index, a scoreboard. It's a scoreboard with no intrinsic meaning. When the Dow was born in 1896, this index was 40.94, which was the average price of the 12 stocks that were in the original Dow. And calling it the Dow Jones Industrial Average, that's just historical branding. It's 30 big blue chip American companies chosen by a committee. They're not industrial and they're not average. Now, I want to be clear. It's not the whole stock market that's important. It is just what's going on with the blue chip sector. It's definitely not the whole economy. It's what's going on with corporations. Because they're all blue chips, they're not young companies. There's very few technology companies, no Facebook, no Netflix, no utilities for a weird historical reason. Look, that's not really the point here. I don't want to rag on the Dow. And the truth is, it doesn't tend to matter that much. It rises and falls with the more serious indices like the S&P 500. So this first chart shows you good enough. And it shows you that the Dow over the course of the second Trump presidency, the Dow rose 15%. But if you're trying to turn the stock market into a report card on the present, you've got to compare it to the other kids in the class. So let's get to the only question that really matters. Dow 50,000, but compared to what? Let's compare the United States with the rest of the world. We're going to do that with the simplest possible benchmark. We'll focus on the exact same time period we just talked about, the second Trump presidency. We'll compare two stock indices. These are indices designed for international comparisons. We're going to look at the MSCI Total Return for the US. Impress your friends with that one. And we'll compare it to the MSCI Total Return Index for the world excluding the US. So basically the rest of the world. Here's the punchline. Yes, the financial press is right. The US stock market is up. But it's up only about 16% according to this measure. The rest of the world, the non-American rest of the world index, is up by nearly 38%. So the score is rest of the world 38, the United States 16. That's more than double the growth. Now, I want you to understand all the details behind the calculations and comparisons we just did. So look, I'm using the MSCI Total Return Index because that's the best one for doing apples to apples comparisons across countries. It's broad. It's the standard index. And let's call it a total returns index because it's not just what happens to the price of stocks. It also includes the fact that investors get dividends as well. And dividends really matter. They're the folks, MSCI, who build the global benchmarks that are used by large investors. The comparison that we've just done is as standard as it gets. This is what your Wall Street friends will tell you to do. Okay, so the score is rest of the world 38, United States 16. What I want to do is connect those percentages, 38-16, to the headline number, Dow 50,000, that everyone's talking about. Okay, let's do some math. Just as President Trump came to power, the Dow was at 43,488. Today, it's around 50,000. As we said, that's a rise of about 15%. That's already a useful lesson. We now know 50,000, just an arbitrary number. Here's the thought experiment that I want you to consider. Imagine that we created a rest of the world Dow. We set it to the same starting level of 43,488 that the Dow had at the beginning of the Trump presidency. And then we'll track what it actually did over the last year and a little bit. Well, if it had tracked what the rest of the world did, it would have risen 38%. So it wouldn't be Dow 50,000. Math it out, and you'll discover it would be Dow 60,000. That's the headline we're not celebrating today. In a parallel world, we'd be at Dow 60,000 and throwing a much bigger party. Now, let's make this personal. I want you to understand what this means. If you had invested $43,488 into US stocks on the day Trump became president, you've made $6,500 roughly. Not bad. If instead you'd invested that same $43,488 outside the United States, a 38% return takes you to $60,000. You would have made $16,500 instead of $6,500. It's time for you to ask, where's my missing 10 grand? Okay, maybe now, if you're the data hound I expect you are, you're thinking to yourself, well, comparing the US to the rest of the world, I don't know, there's a lot of countries in the rest of the world, lots of them aren't like us. Let's do a more careful comparison, the sorts of countries that are like us. So now what I want to do is a more intuitive comparison group. We're going to look at the G7. These are large industrialized nations, countries with similar economic systems, similar financial markets, and that have had similar economic shocks. So let's look at the scoreboard. I've calculated it using the MSCI Total Return Index in US dollars. And we see Italy up 53%, the United Kingdom up 41%. Japan is up 40%. Canada! Our friends across the border have been screaming about how the United States has made it so difficult for them to do business. And despite that, the Canadians are up 39%. Germany's up 34%. Our conservative friends tell us that we don't want to be sclerotic like the Europeans, but even France is up 28%. And at the very end of the pack, we get the United States, which is up a mere 16%. And by that yardstick, the US is falling behind. Now let's widen things a little further. What I'm going to do is I'm going to look at every single developed market for which the MSCI creates comparable indices. So there's 23 different countries, and I'm going to again look at what happened to their stock markets through the second Trump presidency. This is stunning. The United States is 21st out of 23 nations. In my household, we'd call that third last. At this point, you might ask, why is the US lagging? What's going on? Why are we falling behind? I haven't yet answered that question. What I've done is given you a sense of why those who boast about the stock market performing well over the past year really haven't got that much to boast about. But what do I think is going on? I don't think I can give you a single clean cause. I don't think the economics and finance is as easy as that. And I want to show you a little modesty. Equally, I have some intuitions. And so here's the basic intuition. Markets hate uncertainty. Markets also hate disruption. Markets like rules that stay more or less stable. Markets like the institutions that have underpinned prosperity for decades because they expect them to underpin prosperity in the future. Markets like trade that flows, contracts that stick, and a government that does what it says it will do. They're not grading what happened last year, which could be the product of all sorts of history. They're trying to price the next few decades. And that's what you and I care about. And what we know is the US is serving up a bigger and bigger dose of uncertainty and disruption, more than other countries. And so perhaps it's not crazy that investors are responding by saying, okay, fine, but I'm going to pay a little less for assets that are tied to the future success of the American economy. Look, I'm not saying every tick of what goes up and what goes down on Wall Street's all about politics, but I do think that it's been a dominant theme for investors. The real point, or the simpler point, is if someone's claiming the market proves my plan is working, you should immediately ask that person for context. Yes, the Dow hit 50,000. That happened. But if you want to use the stock market as a political scoreboard, you don't get to decide whether or not other teams are on the field. And the moment you compare the US to its peers, this turns from a victory lap into a very disappointing report card. Look, there's a broader point here about how to analyze economic numbers. And so the habit that I want you to steal from this analysis and take with you is this. Whenever someone waves a big number at you, whether it's stocks or jobs or inflation or anything, ask the economist question. Or what? Compared to what? Because context isn't a buzzkill. If you want to make sense of these numbers, context is the whole story.